Welcome, everyone. I'm Greg Schnell, the Canadian technician, and I am sorry. Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll look for long time frame trades. Please also subscribe to my articles and Twitter feed, as that way you'll be able to get updates throughout the week. So for today, what I wanted to cover off, first of all, is its options expiration. So we're going to discuss that a little bit and why I think that's always an important thing to be aware of. But oil stocks have been behaving relatively well in the last few days. And so I want to get ready for the next commodity thrust and just show people how to do that. And so we're going to go through oil and oil services companies during the show today. And I wrote a Don't Ignore This Chart article that will be out a little bit later today, and it'll have an article about Marathon Oil in there. But we're going to talk about when your chart lists are set up, how they're set up, and I did a complete version on how to set up a new chart list just to go grab some industry components on Wednesday. So if you go check out the February 13th edition of Market Buzz on the Stock Charts YouTube page, you'll find that, and I'll show you where to find that in just a second. And then the things you're looking for stocks starting to break out of bases, or you're looking for stocks that are starting to become some of the strongest performers. But what we find in the commodities is they go from loved to hated to loved to hated very, very quickly. And yesterday was Valentine's Day, and for some reason the oil stocks are starting to be loved. So then again, we want to massage the list to bring out the best, and whether that's sorting by industry group type. So as an example, perhaps in oil services, we want to go find, pipeline stocks or something like that. We can look for different types of things in there. And then the second component of that is when you're looking, you want to look broadly to try and get industry strength as well as just one company strength. So we want to make sure that the rest are doing that. And I want to always remind people, trading technology stocks is way different than trading commodity stocks. And the reason that they differ so much is, let's say that I have a software company and I'm designing a new software. And on Wednesday, we covered that off. But what will happen is those companies can go for a run for 1, 2, 3, 4, 5 years. And then all of a sudden their software kind of reaches peak and it passes, the torch on to the next great thing, and that stock kind of becomes a more average performer. What happens in the commodity space is these things go on wicked runs up and wicked runs down both ways. And I strongly recommend that you don't take a position in whatever, let's call it ExxonMobil, and just hold it. These things swing wildly, and so your portfolio value swings wildly. And really what you want to do with commodity stocks is you want to get in while they're moving up, and you want to get out while they're moving down, or you want to go short or whatever. I think there's enough things to go long. You don't usually have to go short. But the point I would make here is I do not want you to get into the concept of buy and hold on commodity stocks. It just doesn't work well, and your portfolio will suffer. And I've held enough to know oil and gas stocks, and they give up 50% pretty quick. So anyway, it's much easier to just have your exit strategy already figured out and then take it. So let's jump into it. Okay, so first of all, I want to show you how to get to the YouTube channel. So if you literally just go to YouTube and look for stock charts, and then on here, you're going to find a whole bunch of pages. So let me just do this one other way. Go up here and youtube.com. And of course, I've got it set up as a bookmark, but I would encourage you to just go find it. And then so you're coming up to the stock charts page, and on this stock charts page, you've got a whole bunch of videos. Yeah,
your investments aren't growing as
okay. And so what happens anyway, farther down here is Market Buzz, and you'll find 2 of those every week. Arthur Hill's got 2 shows every week, and Mary Ellen McGonigal has 1 show on Mondays, all in this time slot. So you'll find those right in here. But as an example, the Market Buzz shows, the one I did on Wednesday is the one that we're kind of going to work off of in terms of setting up a group. So anyway, that's how you do it. But I would bookmark the pages, and then you can go to it anytime you want. Okay, let's get into the overall market. What I want to specifically go through here is the S&P. We had some big rally to start the morning, which is nice to see. But we are on options expiration day, and what does that mean, and why is that important? So what I do every month is, and I have two of these, I have one for Fed meetings and one for options expiration. And so this month, we're at the third Friday of the month, which is options expiration. And then once every 3 months, we get this blue options expiration. And what that is quarterly options expiration also expire, not just the monthlies. And so we end up with more volume. And we also have a whole bunch of other types of options that get reset on that date. So it becomes a high volume date almost every time. Now, it doesn't always mark the change, but as you can see here, it pretty much marked the December lows. It pretty much marked the September highs. And some of these in here, you know, from this option to this one, the price moved up, 25 points or something over a period of 2 months. And in a lot of these chopping periods in here, you'll see that a lot of times they just kind of come back to the same levels. And I think what happens is, and this is more of a hypothetical, but when you're looking at the markets and you're an options trader, you're trying to figure out, you're rolling forward to your next month's contract or 2 months out or whatever. And as those positions come up for renewal, you have to close the position and then you have to restart in a new position. And so one of the things I think that we often see in options expiration periods are either where the stocks do nothing for a couple of weeks after, like maybe in here, or in here where they just wander sideways. But when they really get a nice rally going, you can usually mark the tops and the bottoms of these rallies by the options expiration or the Fed meeting. And so between the two of them, at least be aware of when they are. And again, they're high volume days, not necessarily volatile days. But the point I would like to just make sure is I think it's something important to be aware of when those days are, and just try to understand what exactly is causing a high volume day. So here as an example, this is an options expiration day just before the low. So it wasn't the low that caused this volume spike, it was options expiration. Here's options expiration. The quarterly ones really have high volume. So you can just see sticking right out on the chart here. And we were within days of the high. And this one, for some reason, I didn't put the line on the right spot. But you can see it's the Friday before the third. It's the third Friday of the month. So the earliest it can be is the 15th of the month, and the latest it can be is the 21st of the month. So anyway, so going through and just marking those on the chart, I think is a worthwhile exercise just to be aware of, and look at the September top, the November top. These are Fed meetings, and you can see these falling down. Oh, so that's what it is. Sorry, this is the Fed meeting, and this was the options expiration. But when you see these volumes pop up, try and understand what is causing the volume. Is it just one of those days that shows up all the time, or is it actually something new? Okay, so we've talked through why I think they're important. The one thing that's been going on in the last couple of days is this marathon oil chart. Look at the volume. You know, this thing was doing 10 or 12 million a day, and on Wednesday, all of a sudden it jumped up to 25 million. Price hardly moved. For some reason, somebody knew something. And then yesterday, it jumped up to 35 million shares, and the stock ran up 7% or 8%. And today, it's consolidating. So no surprise after a move like that it would consolidate. But what we see here is the stock had a big base building in here for 2 months and a relatively significant downtrend. And now it's starting to make its move. So one of the things that I like to see on these stocks is I want to see this downtrend in momentum change. So if I annotate this chart, we've got a line here, and I want to see this start to break out to the upside. And when that starts to break out, I think that's important. And again, I've already done a don't ignore this chart article on here, so I don't have to think too much about what I'm trying to annotate. But you can see the scooter ranking has been below 30 for the last 3 months, and all of a sudden it's starting to surge above. So this black line is the scooter ranking. which is a relative strength measure. And over here on the left side is the scale for the purple relative strength, which is comparing it to the S&P 500 as a group. But what you'll notice when we go to a weekly chart on this is as the stock starts to break these downtrends, what we want to see is obviously a momentum change in the stock. And normally what we see is momentum changes before the stock price starts to change. So how can we show that? And the example would be if we go look at Marathon Oil in the last 3 lows or whatever, what you see here is the stock is in a downtrend, and we mark major commodity lows down here. Then in here we did the same thing below zero. In here we're doing the same thing, and this week it's just starting to break out to new 2-month highs. In this case it's breaking out to new 3-month highs, and in this case it's breaking out barely to 2-week highs, but it was a sudden surge, and then again it wound its way higher. Now the chart looks fairly compressed, and you can see that this chart in the last 5 years has gone from $38 to $6. That's obviously tough selling. And then from 6 to 18, so that's a triple, and then down, cut in half 50%, then up 100%, then down. So these things move very, very quickly. And so again, you don't buy and hold commodity stocks, you trade commodity stocks. So just to make sure everybody's on board with what we're talking about today. So when we look at the scooter ranking, what we see up here, and we have some false alarms where the scooter starts to run, but don't get me wrong, it was still all right. The stock went on a 4 or 5 week run, and then you had to sell out of it. But when you're getting these strong surges, in this particular case, all of a sudden the scooter has been oversold for months, starts to surge, you get your PPO crossing up, full stochastic starting to run, your relative strength downtrend for the S&P 500 is starting to break out, and I could have drawn a lot longer line across here. But you get the idea. We're just trying to see breaks in trend, and then once the trend breaks, we just want to make sure that the stock follows through. So one of the things we don't want to see is a full stochastic, especially on a weekly chart, rolling over. And if you were to look at a marijuana stock, and the reason I just want to use those is because they're setting up for kind of a rollover. When you get these rollovers that are below zero, or below 80, the stocks aren't doing much. When you get these big pushes, this is pretty important, and that's really where you start to make some money, but they have to go through 50 to get up there, so it's a good place to watch. And then as the full stochastic comes back to this 50 level, the stock kind of went sideways, tried to rally, and then put in a significantly lower high, nowhere near 80, and rolls over. And so one of the things to really be cautious of is a stock that can't get back up into the top of its range. So what a full stochastic does is, here's a 14-week full stochastic. So it's going to take the price action in the last 14 weeks, and on a scale of 0 to 100, kind of where is it in the scale. And so here you can see that we're clearly up above the top of the last 14 weeks, which is roughly 3 months. And it's starting to break out. And as it starts to break out, then all of a sudden the stock records a higher full stochastic. Now, what will happen as it keeps making new highs, it'll stay up at that level because it's always in the top 20% or whatever. And we're using a moving average with a full stochastic. If you actually just watched it, it would be very spiky, but this moving average helps show the data. So when you get these rollovers in momentum, you just need to at least be aware of the problem, that momentum is fading on a short-term basis. And what you don't know, is it going to fall suddenly, or is it just going to kind of wobble along like this? So as a trader, and we're going to go back to the Marathon Oil chart, as a trader, what we want to watch for is these starting to break out conversely, so not turning down as I just discussed, but also turning up. And as you go through this 50 level, usually it's a nice place to at least be aware of stocks. So you could do a simple scan for, stocks, weekly full stochastic moving above 50. And that would be a relatively easy scan to run. Obviously, you're going to get a lot of stuff in there. So you need to decide if it's an industry group you want to watch or whatever. But the point I want to make today about commodities, again, commodities, you need to buy them low and sell them high. You don't want to wait until they're breaking out to new 52-week highs to start getting involved. That'll pretty much wipe out your account almost all the time. And the reason for that is commodities range trade, and software stocks can make this nice, beautiful run bottom left to top right, but that's not how commodities work. So I would encourage you to at least think about trading them, and it's more because, they, from here, let's just pick $15. So it was 24, went to 12.50, so a 50% reduction. In here, just call it $16 for now. It would be a 50% bump just to get back to October's highs. So these are nice, wide-ranging, fast-moving. If you want something really starting to make money, and these things run up 50% in 6-8 weeks, and then you can sell them, there's nothing wrong with that. So it's worth doing, and you're getting the price action you want. So on Marathon Oil, and the only reason I bring it up is just because it was one of the big movers in the last few days, it's at least telling us there's something going on. And so what I like to do for that, so I've already shown you how to do how to go get a chart list created. We did that on Wednesday. We created one for software. So you would literally go and try to find stocks in the energy sector, or in the exploration and production industry, or the pipelines, or oil services, or whatever you'd like, and put them into a group. And then we can sort them, of course, by intraday, 1 week, or 1 month. And obviously, low volume is a problem. Low price is a problem when you're using these scales. This one doubles. So if for the purpose of discussion, I leave these low price ones in, but in reality, in my own trading account, I'm not going to trade something that's under $1. I'm probably not going to trade, I might trade this $2.50 one, but the chart would have to be pretty enticing for me to want to do that. Anyway, so as we work through these charts, again, just trying to get a feel for what's moving is pretty important. And the easiest way to do that is you're just looking for 1 month or 3 month. And as these stocks start to take off, then they're going to tell you that something is moving. And so what we want to see on here's Telluride. What happened there? Tellurian, sorry. And what we see here is a nice big 6-month base, and we're just breaking out to the upside on these. The stock's already got a scooter ranking of 97, so that's pretty strong. And as these start to come out of this base, that's helpful. Now we can do two things. We can sort on the scooter ranking. And of course, we've got some stocks that are up here above 75. And I think you're going to find, I don't know why that's doing that. Let's just see if we get a different one here. Why is that not showing up? Okay. So as we start, that's spotty at best. What I would normally like to do is just kind of quickly scan these charts as we fly by them. And then as we go down to the bottom of the list, and obviously oil's been out of favor, which is fully understandable. So these scooter rankings are really weak. Well, I'm not really interested in a scooter ranking down here. We're going to have to click on these. I'm not really interested in a scooter ranking that's still down in the 7 level, but one of the places that's nice to watch for is going between when they're below 25 and starting to move above. So going from some of the worst performers in the market to starting to improve. So if we just start to look in around this 20 level, or 25 level, you can see this is putting in a nice wave, and obviously starting to break a downtrend. We're looking at a daily chart here. I like to look at the weeklies, and what we see as it comes in is this PPO is just starting to turn up, starting to break out. The price action has consolidated, made a base. Now it's trying to make a higher low, and then it wouldn't be long for a higher high, and starting to work its way out of here. So the scooter ranking still looks weak. But again, once they start to really accelerate, this is where you want to get on board. And in this particular case, it all happened in 1 week and then really did nothing from there forward. I want something that's probably not looking this week. I mean, this chart's been declining for 5 years, so I'm probably not going to trade this chart. But as we're working through these chart lists, and I just want to go back into there, looking around this 30 level for commodity stocks coming out of this deep level of oversold is just fine. And I fully get it. If you're not used to trading commodity stocks, you're thinking, why would I trade something this week? And it's literally because they, this is $5 and here was the high in October at 10. This chart was in a big giant uptrend, pulled back. You can buy it for 50% off and hopefully get that move again. And what we're looking, on a weekly chart, this downtrend in PPO is just trying to start turning up here. We still don't have volume showing up to buy it, but all of these stocks, as they go through this 25% level, it's helpful to watch, especially in the commodities. So depending on the category of stock you're trading, oil and gas or commodity related stuff, you have to think differently about it than technology stocks. A weak technology stock doesn't usually come back very fast, but a weak oil and gas stock can pop very, very quickly. So I'm looking through here and I'm starting to see some of these bases where we're getting, this is becoming a higher low. And usually that's the low you want to buy. And the reason is here's a low, pulls back, and it's this higher low. It starts to take off. And in this case, it was a 1 week wonder and then pulled back for the rest of the year. In this case, it was an 8 or 10 week run, but it was $1 to $3. And again, the point is that they move quickly both ways. So you want to catch these rides. And as the scooter or as the full stochastic goes above 50, this is very helpful. So this stock, here's your full stochastic jumping up. I'll call it at $3 just to pick a number, $3.50. And anyway, don't get me wrong, still lots of volatility, but traded all the way up to $9 in less than 6 months or 7 months there. So you're getting a big, huge move. And the scooter rankings telling you the stock is starting to behave great. So in this particular case, I like it because the stock is showing history of getting into very strong overbought levels, hitting new highs regularly all the way through this period. And then it got up here and rolled over. And now you're getting the chance to buy it on the pullback as it starts to break out to the upside. So am I recommending this stock today? That's not the purpose of the discussion today. It's to talk about why you would buy commodities, even though the scooter rankings are terrible as opposed to great, like the software ones we looked at on Wednesday. And then the second component of that is what you want to look for. And for me, this stock built a huge base, let's just call it under $4, and rallied up and then pulled back. And on the big picture, this back check to break out the base is a great place to enter. If we go look, I want to just show you something from the banking sector, and I think it's probably just better off to go grab a new chart. Let's just do, KBE. What we see on here, I want to go to a 15 or a 20-year chart, and there's a specific reason that I want to do this. And what you see is in these oversold sectors, so we know that the financials crashed, okay, and we're wasting half of our real estate here, so I'm just going to suck this up a bit. When we saw financials crash, what happened was it took about 3 years for this secondary bounce to come in. And then that secondary bounce was kind of a great place to get on board. And so if we think about oil and gas crashing in 2016, really through this sort of similar move, we went from $100 to $25 oil. So it fell down, and now we've rallied back up, and we're about 2 to 3 years later. And we're starting to make a low, and in some cases it's at the same level. Some cases it's higher. So even though the price of oil is double where it was, we've got lots of stocks trading down near the 2016 lows. But getting on this wave kind of as momentum has improved and then waned on the big picture, this can be an excellent kind of secondary low So again, we've got this intermediate low on a daily basis, intermediate low on the really intermediate time frame, so let's say weekly, and then we have this big picture, which is kind of over the years we're starting to see these higher lows start to set in, and we want to watch that climb out of here. So I think oil's just setting up this secondary base. So if we go back and we look at whatever, let's pick ConocoPhillips, just to take a name. So what we see is we had this big drop down, and now we've rallied back up, and maybe this was the secondary base, whatever. We're starting to make these higher bases coming out of this low, and so I wouldn't be as pessimistic that it doesn't work. Now, all of that being said, if all of a sudden the PPO starts to roll over and goes negative here, you don't want to be on board for that. So commodities, again, big swings both ways. What we really want to watch for is that push, and we're starting to see it in companies like Marathon Oil, and this ConocoPhillips is up 5% on the week. That's a nice week in anybody's trading world. So hopefully I've given you some ideas about why to trade commodities, where to start looking. That breaking above 75 can be helpful, but also breaking above the 25 on the SCTR ranking. And just to get into the industry groups itself, so first of all, here's oil, USO. It's not doing much yet. The scooter ranking is still weak, so compared to other ETFs out there, it really hasn't started to percolate up. But look at how its full stochastic's at 50. This is where we really wanted to see it push to the top of the range, and that's probably where we get the rest of the oil stocks to pile on. So going back to the actual stocks in the groups here, what we want to do is either use the scooter ranking to kind of control what we're looking at, or use the percent change. And then I've got it set to 3 months, but you could pick whatever, 1 week, or you could pick, just intraday, some period of time that helps you see that the changes taking place. And my suggestion would be to, usually look at 1 week, 1 month, 3 months, and just start to see which stocks are really starting to hit their stride. And if you can, then, so here's this Venom. I don't know anything about it, but that's that's exactly what I'm talking about in terms of commodities. Look at that thing, range trade from 22 to 42, back to 22, and you're already halfway back up. So huge wild swings. And again, just being on the right side of the trade, you can make some serious money. And if you want to trade it both ways, that's possible too. But my big perspective on this is just, commodities are so nice to trade because they move fast. And so if you're trying to get big pushes in your portfolio, I think commodities are a great way to do that. For people who aren't used to trading commodities, it's terrible. They have a lot of trouble because they want to buy and hold for years and years and years. And they just don't work like that. So make sure you understand what you're trading before you try to take it on. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern and 7:30 a.m. Pacific on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel, which I showed you, or on Stock Charts TV, which has a running list of technical charting informational shows. Thank you.